Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. We have Charu Chanana, market strategist from Saxo Markets Singapore today. Welcome to the show, Charu.
Thank you, Brian. Pleasure to be here today.
Now, Charu, before we get your insights, let's take a quick look at how crypto markets are performing and then also regional stock markets. We start with Bitcoin, which is at 19,585. It's up 2.06%. Ethereum is at 1,335.12. It's up 2.29%. Now, looking across to regional stock markets, we start close to home to you, Charu, with the SGX, which is down 0.06%. Bursa Malaysia, however, is up 0.29%. Shanghai is up 0.33%. The ASX All Ordinaries is up a whopping 1.86%. The Nikkei is up 1.51%. The Hang Seng is up 1.27%. And rounding up the numbers, we've got the Kospi, which is up 0.91%. Now, Charu, what's your view on this largely green market today?
Brian, I think some of it is, of course, the hints that we get from the overnight US markets that have been quite positive in two ways. First, especially the news coming out of UK has been a little bit more positive after all the political and the fiscal drama that we've seen in the last few weeks. Plus also the US earnings, especially on the bank side. We had Bank of America reporting last night and a pretty solid numbers there, broad-based revenue growth for them as well. So kind of giving a slightly more upbeat start to the earnings season right now. And I think thirdly, most importantly, I think this is a technical rally. The number of puts that have actually been sold last week is 3 times the number of call options. So, while we remain in this, largely long-term downtrend in the equity markets right now, I think people are, of course, covering their positions a lot more. So any positive news, a little bit small positive indications can usually lead to this kind of a technical rally.
Okay, so Charu, I want to zoom in a little bit on what you just said just now in terms of the UK. I think what's next for the UK? Is the market expecting any more policy U-turns? Or is stability, is there a perception that now stability is returning to UK policy?
As we say, fiscal credibility is easy to lose, but it's very hard to regain. So, and of course, the new chancellor has announced some, key decisions just yesterday in his first day in office. He's reversed some 32 billion pounds of tax cuts that were announced by the Truss government in the beginning when they started off with the old chancellor. But they still have a lot of ground to cover there. About 40 billion pounds is still left to really close that fiscal gap, right? And on top of that, what is important to note here is that they will have to take some risky decisions. So, for example, another measure that was announced yesterday was the energy, household energy support that they're providing, which was expected to last for 2 years, but now will be reconsidered in April. So that's a kind of a risky measure. If we do see energy prices rising again, that could really mean a big recession for the UK. I mean, it's coming their way for sure, but it could just turn much worse from here. So what is really needed right now is a very coordinated policy between the different UK authorities. We had the BOE just a few minutes back announcing a delay in its quantitative tightening program as well. So we are seeing some welcome steps there in terms of policy response, but I do think a lot more needs to be done because pension funds and the likes of portfolio managers will have a tough time really giving that allocation back to UK assets what they used to. So gaining that trust back is going to be an uphill battle, really.
And on that note, then let's move a little bit closer to home. New Zealand consumer prices rose 7.2% in the third quarter compared to the same period last year. They just announced that, much higher than the 6.6% predicted by analysts in a poll. We also had the RBA minutes that came out this morning. Could you tell us what are some of the key points that came out of that RBA meeting?
So if you look at the New Zealand inflation number, I think one thing is clear that central bankers are really having a tough time getting that inflation number in control. But like for the US Fed, we are expecting a peak Fed hawkishness in this quarter, which means the markets are currently really pricing in about 5% terminal rates. A very similar story is actually going on in the New Zealand as well, which was ahead of the curve. It started tightening policy much ahead of the US as well. And now the peak terminal rate is actually being seen at 5.4%, which is big, and it is a little bit scary for me because if they do go to that level, that can again mean a big recession for New Zealand as well. So this is a time for central bankers to really cautiously treat that growth inflation path and understand what they need to do. We did see a bid in the New Zealand dollar today, and given the positioning that we are at in terms of New Zealand dollar, there could be tactically some more gains to come for that New Zealand dollar versus the US dollar, or particularly the Aussie dollar, as you mentioned, the RBA minutes as well, which are now turning a little bit less hawkish, compared to the other G10 central banks. And that's mostly because RBA had the same problem. Terminal rate expectations were 4% plus, and they are just guiding for 3.4%. So they need to kind of take that turn in their policy direction. So we might be looking at something like that from the RBNZ as well in the weeks to come.
Now, Charu, as always, thank you very much for coming on the show. Thank you very much for your insights.
Thank you, Brian. Pleasure.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thank you very much for tuning in.